Hello my traders, welcome back to the channel. Today I've just woken up and I feel like I want to do this video before I start doing some other stuff. But what you see on the screen, there's a strategy I shared, a setup I shared yesterday, and I hope you guys have tried it out, backtested, and seen what results you guys can get. So this is a trade that I entered yesterday. It was on a BTC USD. This is the uneasy 1:4. Yeah, 1:4. So now this is a setup, one of the setups that I've been telling you about. This one is uneasy, a base drop rally. Look at the clean move away. So you entry. You see, with this strategy, the moment you identify the setup and see the trend of the market, that is all you need to use this strategy and these setups. So I identified the setup. I saw it was clean on it was I think even on the 4-hour, because I saw it on the 4-hour. There was a base, then a very clean move which broke the structure here. See, broke the structure here. May I always consider break of structure on the body closure. However, most people treat these strategies supply and demand, consider the wicks. But even if you consider the wicks here, the body closed above, so it was a valid break of structure. And then the main issue here is the move away. Look at this basing candle and this huge Marabozu candle. Marabozu candle, you know, a candle without wicks. That is a very powerful candle in the market. A candle without wicks. Look at this huge Marabozu candle. No wicks, no whatsoever. Just a bare movement. This candle symbolizes that there was only buyers in this 4-hour candle. There were no sellers involved in this 4-hour candle. People were mainly buying. It is the same thing with the candle down here. So a Marabozu, but a small one, then followed by a big one. So what do? You go to the lower time frames to find your entries. So when you went to the H3, you found that we had our basing of 3 candles. I had a basing of 3 candles, 2 indecision candles, and then 2 move away candles. And look at the move away, guys. Very huge move away. This is the move away that I always want to trade. So when you go to the 2-hour, almost the same thing. You go to the 1-hour, almost the same thing, but not the same. So when you go down to the 1-hour, you see that the basing candles were many spread out, but even the move was decent. 1, 2, 3, 4 green candles moving out, meaning that is a strong area for buys. So we have marked our area, this one. So now we are waiting for price to come here, to come down here, and then we shall buy. I think it was around 7. It was around 7 that this trade was triggered. Price triggered the trade, went up, played around, came back, and look at the short up. 100 pips, guys. Risking only 24 pips. So this one I would round it to 25. Normally I don't range between 20. I would round it 25, 100 pips. That was the target. 1:4. You could go up to 1:5, and that is too risky. The real target would have stopped here, 1:4, and then you get out of the market. So that is just those are just one of the setups that I have. So today what I wanted to teach you, I don't want this video to be long because I'm going to do some other stuff. So I wanted to teach you about yesterday I showed you one setup. So I wanted to teach you about another setup that you can use every day to make at least, I don't know, it depends. So yesterday I was talking about, why is it this one here? I was talking about something like this. Price goes up, bases, and then continues to the upside, something like that. Then the inverse is the same for the sellers. Price goes down, bases, and then continues down. So the idea is when price comes back to this supply zone, the price will leave a supply zone around that area. So when price comes back to the supply zone, you sell targeting the previous high. So when price comes back to the supply zone like this, then you sell targeting this previous high. That is the idea. Same thing for the buyers. So price will leave a demand zone here and then go up. So when price comes back to this demand zone, we shall buy targeting the previous high. So that is going to be your it is going to be your trade. Your risk to reward is going to be the previous low. So my stop losses, I put them slightly below the low. However, if it is 19 pips, I'll round off to 20. If it is 24, I round off to 25, like that. If it is 35, I round off to 35. Then I target the previous high, which is this one here. How many pips are those? This around 92. So I'm risking 20 to make 92. This is 1:4.5. These setups always work out. Okay, not always, but most of the times they are going to work out. Most of the times they are going to work out. If you see them, take them. If you see them, take them. Just take the setup and don't start second guessing it and saying, oh, maybe this one might. As long as it is moving with the trend, guys, just take the setup. So we're going to go to the charts and look for those setups and see if we can get them. Today I'm using the 1 hour time frame. I'm using the 1 hour time frame because on the 1 hour you'll get the setups more often. So Bitcoin was in a bullish trend or uptrend. So we just want to see those areas of consolidation and then a huge move. So this one was going up. Do you see here? Up, indecision candle, up. You see these indecision candles? They look like indecision candles, but they are consolidations on the lower time frames. Why do I say so? Because you see this candle went up, came down, and in the middle. So when you go to the lower time frame, it is something like a zigzag, or some consolidation, because went up, down, then staged in the middle. So this one, this is what we call a hidden demand zone. So you might mark the whole candle depending. You might mark the whole candle depending on the zone. But if it's like this one, where you find two indecision candles, you'll have to mark both of them from the body to the wick. If you mark up to the wick up, it's going to be, the area is going to be big. So just mark from the body to the wick. So look at what happened a few hours later. We said that you enter and put your stop loss slightly below. So now this one that is 37, I'm going to put it to 40 like that. So where do we target? We target the previous high. This is the previous high. So what is the risk to reward? The risk to reward is 1 is equal to 3. 1 is equal to 3. So price will come, retrace here. Okay, these are the things that I normally don't want. That's why when I set these things, I don't be on the charts. Price will come, tap you in, and then go to your target. This one tapped you in and went to your target immediately. I think it tapped you in here. 1, 2, 3, 4, 5, 6. Within 6 hours, you're with your target 100 pips, 132 pips, and you are out of the market. And it came back, tested a little bit, and then showed you to more than that. So if you had left a few positions holding, you would be in your profit. So that is one. This is a rally, a base, a rally. If you don't see it very well, you go to the line chart. You see, this is what we do: up, base, up. Let me draw it for you here. And guys, these setups, this is rally, base, rally. Let me just say what this thing, very useless thing. Okay, this is a rally, a base, a rally. So we are together. So if I pull this thing out like this, does it look like something we've been saying? So now price will come back here, pick your orders and go to your target. Yes, doesn't it look like something we've been saying? So that is the setup, guys. So I'm just going to go on to look at more examples before I call it a day. So we have another one here. This is a rally, a base, a rally. You see an indecision candle. This is a huge candle followed by 3 indecision candles and then a rally. You come and mark the indecision candles, this one to the wick, to their wick down. So what do we want? We want price to come back, tap us in and take you up. So this one, you do not target you do not target the previous high, because this one took you all the way to the up. So now if you target the previous high, this is 1:1. However, this is 1:1, you could get out at 50 pips, but this is because it was in an uptrend, you know, it was bullish, you could hold to a 1:5. Same things, guys, same things, guys. I'll also go and show you some example of bullish. This was a good one. This was a good one. This was a perfect example. Rally, base, rally. This is a trade I'll take any day, anytime. However, price did not come back to pick your orders, and things will happen. Sometimes price will not come back to pick your orders, so don't feel like the strategy is not working. Now there's this one here: rally, base, rally, and then price went up. So you just mark here indecision candle like that. This one you should do mark from here like that. That is too low. So after, put your orders here and your stop loss slightly. That is 80. Okay, let me leave it there. So what is the target? The previous high. Where is the previous high? It is this one here. So this is 1:2.9. That's a 253 pips on Bitcoin. However, this is something you could hold to around 600 pips. That is a 1:6. So it will depend on your patience and your psychology of holding trades. So that is also in this leg only. You would have taken one. You would have taken 1, 2, 3 trades and missed how many? Missed one. So you'd have taken 3 trades and missed one, and you did not lose any. So that was the bullish example. So let's go to the bearish example. So the bearish example, we have rally, base, rally, breaking this structure here, breaking this structure here. So where is our base? Is here. The base is here. So you mark from the wick to the wick to the wick or to the body up, and then you target the previous high. So this one, what if I will do? Target the previous high, which is this one here. That is 1:1.6, 140 pips, but you could hold it to 1:2.8, 1:3. Yes, 260. If you are strong enough, you could wait, retraces up to around 40 pips, brings you back to 500 pips. And I don't know, I don't think one of you would sustain that pressure. So that is a rally, a base, and a drop, base drop. So for the bearish it is base drop, for the bullish it is rally, base rally. So bearish, this was not much a bearish. This one here, there is also this one here, rally, base, few indecision candles, drop. This drop is very beautiful. So this is an area you would want to try like that. But now in this case you did not get to the previous high. It was a beautiful trade, but did not get to the previous high, so you're going to be stopped out. If you didn't manage your trade well, it went to 1.5 and then retraced back until when it hit your stop loss. So if you did not manage your trade, there you were out, but at least it gave you 1:1.5, guys. Where this one here, drop, base, drop, then mark your indecision candles well, mark all of them like that. Then target the previous high, which is this one, 1:2. You could hold it to 1:7 if you are strong enough in holding. So I don't want this video to be long. I'm just showing you what happens in those circumstances. And then we have a rally, base, rally here, rally, base, rally. See how those many indecision candles, mark all of them like that. So, and these trades always happen, guys. These ones you have to set and forget. If you wait on the chart, you're going to miss them. First is going to tap you. Sniper entry target the previous high. This is 1:3, 153 pips. You set them and forget them. If you set them and sit there, price is going to tap your sniper entry, and then it goes in your direction. Guys, I think that is all. There is one here, rally, base, rally. So these are continuation patterns, guys. They don't need to break structure. If they break structure, well and good, but even if they don't need to. Guys, did I tell you to subscribe? I didn't tell you to subscribe, guys. You had to subscribe from the beginning. From the beginning, guys. This is rally, base, rally. So this one even broke structure here, so this one is a strong one. So you mark the indecision candle like that. You see, I'm just cherry picking them. The moment you identify that the trend is bullish or bearish, then you look for opportunities that are going to be following the trend. That is 1:2.5, 146 pips, just like that. So guys, go and test it out. Subscribe to the channel, guys. Subscribe. We are on the road to 300 subscribers. We are 260, so subscribe. The community is growing so fast. Subscribe and be part of the community. Let's grow together. Yes, so I think that is all. Okay, let me give you the last one. Rally, base, rally. Look at this huge candle move how it even broke structure here, cross the downward trend line. So this is a trade that you would take all day, every day. The trade is good. Every day. Okay, so you enter from here like that and target the previous high, which is there. That is 1:2.83, 235 pips. Easy, busy. Okay, guys, so I think that is all for today, guys. Subscribe to the channel if you've learned something from the video. Kind of like it. There is this one here, but this one is a drop, base, rally. This one here, and this one was a good trade. However, if you didn't manage it, sniper entry, immediately to give you a sniper entry, you move the stop losses above break even and hold them the fucker. So this one you'd first target here, first level target 260 pips. So the moment it moved to around 200, the moment it moved to 200 pips, there, guys, you had to remove your position. That is 1:2. Why would you be greedy to wait up to there? and you don't know whether it will come back or not. You're not sure, and the target is far. So just remove your. Okay, guys, you see on the 1 hour you get them so frequently. This one was rally, base, rally. You plotted your. By the way, this one was the easiest. Immediately you plotted your candle, and then bought. Immediately it came back, tapped you in, and turned around like that. You see, rally, base, rally. Immediately after this candle price turned around, tapped you in, and went with you to the moon. Guys. Okay, that is all. That is all for today. You can go and backtest this. I know this works. Or every demand and supply trader will tell you this works. So instead of just keeping the information, just give it to guys. You see what they can do with it. So we have another one here. Drop base rally. Very good. We went and even broke structure. Price went, broke structure again. So after some time it came back, picked your orders, and z. Okay guys, go and backtest this. This is the best setup that you can always and always use. Go and backtest this, you let me know. That is all for today. Bye.